Hello, everyone, and welcome to The Big Show. This is Investing and Trading Live, sponsored by Online Trading Academy. If you're a first-time listener, thank you for stopping by. My name is Josh Lilquist, and we are happy to have you with us today. As always, back in the saddle, I have my good friend and my good pal, and he is the stock master today, Mr. Al Connickson. Al, how are you doing today?
Feeling pretty good, Josh. How about you?
I am doing fabulous today.
That's a good way to feel.
It's another F word, but it's fabulous, not fantastic today. It's a little bit different, but it's always a great time talking about the markets here on Investing and Trading Live, and just a little bit about our sponsor, Online Trading Academy, training people just like you for over 25 years, actually on their 26th year, teaching people how to trade stocks, options, futures, Forex, how to make smarter investing decisions within your income strategies or your wealth, which would be your longer-term retirement accounts, 401ks and IRAs. We're going to talk about that here coming up here, probably in the third and the fourth segment, so make sure to stay tuned for the whole show. But Al, we got a lot to talk about here this week, and I have a little trivia for you. Do you know what happened on January 22nd, 1973, 50 years ago?
You know what? That's the one day, the only day that you could ask me that I don't remember what happened, but that happens to be the day.
That is that one day. You do remember a lot of things, but I will say, I'll give you a couple word quote. Down goes Frazier. When Frazier went down, George Foreman knocked him out, and that is kind of what's happening right now. We have some banks going down.
I do remember that.
You do remember that.
Right.
That's kind of what's happening.
Yep.
You got Silicon Valley Bank going under this past week, and other banks as well. I believe it was Signature.
Well, a whole bunch of banks got kind of sucked up into this debacle.
Yeah, we're seeing some major volatility because of that. Interest rates coming up here this coming week as well. Right. So some big volatility, which really creates a lot of opportunity here today. So, Al, with some of these banks going down, I want to unpack that a little bit here today. Mm-hmm. What does that look like for us moving forward?
Well, there'll always be opportunities, and every time something like this happens, like the Silicon Valley Bank, that was the one that really started the snowball rolling. And it's a bank that a lot of venture capitalists basically made their startups put their money into. A lot of tech companies, and a lot of those tech companies were climate related.
Yep, and hence it was in Silicon Valley.
In Silicon Valley, right. And there was a problem. Part of the problem was the Fed kept raising interest rates, which meant that the long-term treasuries that these banks held were going down in value. So they had a huge amount of unrealized losses. And it wasn't just the Silicon Valley Bank. There were about 24 other banks that earlier this last week, were down as much as 60% or more.
Well, you even look at some of the big banks. You got J.P. Morgan. They're down for the week. What is it? 11%.
Yeah,
just in the week.
Yeah,
that's
even,
a big
even
drop.
Companies like Schwab, their investment, the investment company, they took a big hit. But really, it really kind of covered that whole financial sector, the banks, the institutions that are relied on to loan money to people. A lot of these startups and a lot of the venture capitalists are relying on these banks to provide enough growth for them to be able to utilize the money that they have invested there. But anyways, that was a big problem. Here's the greater problem, I think. You know that the government always looks for a crisis and thinks that they need to come riding in on a white horse to save everybody. Here they come. And so what's going to happen? More regulations. Those regulations are probably going to impact the ability of these banks to generate greater returns for their shareholders. So there's a bunch of issues there. And the interesting thing, Josh, is that some numbers came out last week, the CPI and the PPI, which were encouraging and typically would have resulted, I think, in a big upward move in the market. But on Wednesday of last week, the day that the PPI came out, which was a very positive number, the Dow was down for a while over 600 points. I mean, it was just a big red day. You look at the market, and it was like a sea of red. Now, the question now is what's going to happen when the Fed meets. Are they going to raise interest rates? Had the Silicon Valley issue not happened, the banking issue not happened, there was a good chance people felt that they weren't going to raise rates. They didn't have to raise rates, or that they were going to raise rates. I'm sorry, they were going to raise rates. But then when the banking issue happened, that impacted the whole financial market. And part of the Fed's job is to make sure that the financial market stays more stable. So now people are thinking, well, maybe they won't raise rates. So we that's a big question that we'll have to wait to see what happens there. But here's the bottom line is that for people that understand how the markets work and have the proper education, it really doesn't make any difference what's happening. Yep. We saw some huge moves this last week, big up moves, big down moves. Those are opportunities just in two different directions to benefit from what is happening in the market.
Yeah, and it all comes down to that one word, and it's opportunity. This great volatility we're seeing is phenomenal as traders and investors, because you don't have to be a buy and hope strategy person, which over a long term, the rate of return just gets lower and lower and lower because you have these big drops.
Right, and that's what people have been relying on for years.
Really, yeah.
That's not working now, and with this kind of a market, with this volatility, that's not where people are going to benefit financially. In fact, that's probably going to be a losing strategy going forward.
Yep.
This is a trader's market.
It is, yeah. And if you look at the market, too, since 2022, the market's been dropping, and it's really like an accordion. If you look at a chart, and that's where we place our decisions, is a price chart, not by companies' earnings or all this stuff that's going on. It's based off price action, and it's accordion. It's going up and going down, going up slowly. You can push it in faster, going down, and that's really what's happening. And quite frankly, we talked about a supply zone back. It was towards the end of February, and sorry, the beginning of February, where the market's been dropping down since then, and really in the last couple of weeks here, down 5, 6, 7%, depending on when you look at the market. So these opportunities as it goes down are phenomenal. And we talk a lot about that in these investing classes that we do here locally, where we dissect, what's happening, what's, some current market conditions, what's going on, what are some of the opportunities, and then really how us as average investors, the public, can trade with the big institutions. We talk a lot about the big institutions. They're the ones that move the market. Regardless, some of them are going under. There's still a lot, billions and billions and trillions of dollars that they're moving daily.
Right.
And when you understand on a price chart what they're doing and trying to analyze the market based on supply and demand, that's where you have low risk, high reward, high probability entry points, and that's usually at or near a turn in price. And that's what we talk about in these investing classes. So I want to invite people to one of these classes to be introduced to these markets, how they work, and strategies for up and down markets. So you can text the word right now. Text the word investing to the number 210-210. That's for 2 seats for this investing class. Text investing to the number 210-210 for 2 seats. When you do that, you're also going to receive a quick start kit, which has some different topics, but also some OTA picks, which we're going to talk about here in the next segment. Opportunities and trading ideas for people that want to see how that supply and demand strategy actually looks like. Text the word investing to the number 210-210 right now for 2 seats. Al, coming up next, let's talk about some of those OTA picks, basically opportunities, potential opportunities that are showing its face in the market. This is Josh and Al. We'll be right back.